How's that, guys? Let me bring down the audio a little bit. That may be a little bit too loud. Testing, testing. How about that? Hopefully good. Cool. Pete, you can hear too? I had to do a reboot last night. I cleared off about literally 300 gigs off of my C drive, and I had to do a hard reboot, so it knocked off all my settings. Thanks, guys. Appreciate it. Sorry about that. All right, so you didn't miss out on much. Just to recap, Goldman Sachs today reporting earnings along with JP Morgan in the pre-market. Today kicks off earnings season in a very, very big way. We do have a short strangle on Goldman Sachs. We sold. We did not buy the options. We sold the options. Therefore, we generated cash flow. We sold to the call side the 400 strike. We also sold to the put side the 362.50 strike, and the probability of profitability is at around 93.97%. The options expire this Friday. I already have an advanced order in to try to close out this trade at around 50% profit. We're not going to hold it to Friday. So assuming that, of course, we don't have the shares explode higher through our strike prices, but ideally it settles down. We see what you call implied volatility crush, and the value of the options deflate. We book profits, move to the sidelines, look for another trade. So that's what's on deck for today with regard to earnings. And as you can see here in the pre-market, nothing going on yet with Goldman. They are bidding the shares in the pre-market. Let's bring up JP Morgan. We also have today at 8:30 a.m. Eastern Standard Time, we have CPI data coming out. Now, we did see a sell-off in the gold mining stocks yesterday, but gold held up fairly well. Nothing here yet on JP Morgan. I want to go back to Goldman. I want to get alerted really quick if by chance, as I'm recording, they announce earnings, and we can take a quick peek of what's going on there. We'll keep this really, really tight. Okay, good. Moving on. Gold. Gold is up. It had a rough morning yesterday, but it rebounded at this lower band of support and rallied back and just went deadline, just flat. Really nothing going on. Yet the gold mining stocks rolled over. The GDXJ in particular, to a lesser extent, the larger cap names. But we have CPI data coming out today. No doubt that's going to influence these trades. We're holding 1,800 on gold, which is very good to see. I think with the gold mining stocks, we may be seeing a bit of resistance above, and traders may want to wash out the weak longs, and hopefully we get another push down on those gold stocks today on hot CPI data. Ideally, hot CPI data, they bid the dollar, they sell bonds, driving yields up higher, and they whack gold and the gold stocks. And I think that's going to be our opportunity to add more to our position, because that's the knee-jerk reaction, and the knee-jerk reaction is generally the wrong reaction. Let's take a look at the U.S. dollar. The Dixie up this morning, strong. When I went to bed last night, we were here, flirting with a breakout, but we did ultimately break out overnight. Yet gold is bidding, and I think even the gold stocks are bidding in the pre-market anyway. You never know. What is this volume on here? This is NUGT volume, 3,500 shares. Volume here, only 100 shares. So we're not going to believe these numbers. Too thin of data. So they're already bidding the dollar. So it looks like we have a front run of the CPI data, and they're looking for a hot number. Although the Twitter sphere is betting that the May highs was the peak. At least those are the charts I saw crossing. Let's flip over to equities. The Russell remains range bound here, as it has for, I mean, months. And we have failed yet again, possibly. This bar has not closed yet. We have failed yet again to hold this breakout. It's like the most porous resistance level there is. Bitcoin, I'm going to skip to Bitcoin for a second out of curiosity. It got whacked yesterday. Flat on the session. S&P 500. Sam, GDX is a bit flat on the Milan exchange. Okay. S&P 500 flat on the session. It looks as though we're going to break to new higher highs here, though. The NASDAQ 100. When I look at this chart, I look at an unsustainable uptrend here. And we are at the pinnacle, or at the, excuse me, the apex of a, sorry folks, the apex of a rising or ascending wedge formation on the NASDAQ 100. The only thing that would prevent the NASDAQ 100 from moving up higher right now, because it's big bank week, you're not going to have tech earnings, you're going to have Taiwan Semiconductor coming out later this week. We're going to trade that in all probability. But the only thing that's going to prevent the NASDAQ from moving up higher into big tech earnings is going to be yields. So that might change today or later this week when they send out the PPI data. So we have CPI, the Consumer Price Index today. Later on this week, the PPI. Clark, earnings whispers expects 124% earnings growth from JP Morgan. Okay, if they're baselining that against a year ago, you know, the headline looks really, really good, right? But we need to keep in mind where we were this time last year in terms of earnings. And I would just ask everybody, when we hear the headline news come off of CNBC, they've been loving to do this lately. All you hear is 60 to 65% earnings growth. What they don't say, some of them do, to be fair, some do. What many don't say is that you're coming off of a baseline of a very weak comparison quarter from the prior year. So it's not as if you're seeing dramatic earnings growth, and I'm not saying JP Morgan, maybe you're 1,000% right. What I'm saying is that they need to be a little bit more clear with the public with regard to the expectation. We're not going to take parking space up in your head. We're going to speak the truth, and the year-ago comparison is very easy to beat in a very, very big way. You got to ask yourself the question, is it priced into the market? I don't think it's priced into JP Morgan. I don't think it's priced into Goldman Sachs. But when we get to big tech earnings, I do think it's priced in there. So, more to come. Thanks for that, Clark. Appreciate it. All right, so we have equities. Let's go back to Goldman. Have they reported? Probably still too early yet. What's the VIX doing? VIX is very weak. You bet, Clark. Home heating oil. Oh, there's no inflation, folks. Here's home heating oil. It's going to be a great winter. I use home heating oil. It's going to be a great winter. We're at highs last seen since November of 2018. No inflation. Don't worry about that. Don't look here. Please don't look here. Look at lumber prices and how far they dropped. Speaking of lumber, out of curiosity, I want to see if lumber has any type of bounce back here. I think it's switched up their futures symbols quite a bit. And I usually had them on the default list. I'm not seeing it here. All right, I don't want to take up too much time here. Lumber. We'll figure it out. It's not that important. All right, let's bond yields. Bond prices, not the yield. And it looks as though we've retraced from the highs. This is a 4-hour chart. Now we're consolidating. And they're trying to break bond prices up higher, which means a drop in bond yields. But this could change very rapidly. I think that they're being overly optimistic here. Let's see if we get a breakout on bond prices. This is our tripwire. We are seeing higher lows on RSI. Let's watch for a breakout on bonds. Silver had a good day yesterday. Where's silver? There we go. Not such a good morning today. We're pulling back. We're frankly flat relative to the close of yesterday. Let's check back in really quick with Goldman. Sometimes these alerts don't fire off in the pre-market. That's why I keep flipping back to Goldman even though I have alerts set. Nothing yet. All right, I have a couple of chart requests to get to. Clark, isn't the United States grid under pressure? Yes, definitely. Wouldn't an increase in electric vehicles? I think that all the time, man. I think it's the craziest thing. That's why I've never gotten into Tesla. It's the funniest thing that you said that. I just don't understand where they think this electricity is going to come from. You have California with rolling blackouts. You have Texas of all states, which had Icetopia last year with their windmills. I don't get it. I really don't get it. So I'm with you, man. I have no explanation for how they're going to come up with all this additional energy. Yeah, Sam, it's for real, man. This is not the United States of yesterday. It's completely different. We are really slipping, really slipping. All right, for Patrick Boyle. You know, 20 years ago, 30 years ago, you would have had the United States clamoring, supporting the uprising down in Cuba. Now you can't even get President Potato to come out and make a statement. What's going on here? What's going on here? This should not be here. I did that reboot yesterday and everything is screwed up. There we go. Okay. All right, Boyle. Boyle is a leveraged ETF putting you long of natural gas. We have traded it. We did well with it. I think we're just at the very beginning of a major bull run here. Let's clean this up. All right, so this is a monthly chart. And what you're seeing here is a beautiful, beautiful W formation. We bottomed out back here in December of 20, consolidated, rallied to a high of, what was the high? Of 29.63 in February of 21, pulled back higher low. We drew this line here. We were watching for the breakout. We got the breakout. And a major move higher in the month of June. So natural gas, we have higher lows, now higher highs. So what this means is that the path of least resistance, which was down, which was a bear market for natural gas, has now changed. Let's throw up a heat map here. And by the way, folks, we're using TrendSpider, 35% discount code below. Check out their new mobile app. I use it all the time. It's outstanding. Sometimes it takes a moment for the heat map to load. We'll stick around here waiting for it. So far this month, you could see that where we had support back in May of 20, several months, the summer of 20, then ultimately we broke. Where we saw a bottom this month at $32.92 is now support yet again. So we broke out last month, retest this month, looking very good. I guess there's not a heat map here to be had. Let's go to a weekly chart. The weekly chart is looking slightly extended. We're trading above the 2 standard deviation Bollinger Band, but very, very strong. You have your trend, which is clearly up. Your moving averages are moving up higher. The shorter duration moving averages are going to cross above the longer duration averages. That's very bullish for natural gas. Daily chart. Here are the heat maps. And what these heat maps show you are where you have support and resistance. And you could see that we hit a resistance range back here on the 29th and then the 30th, and we're back there again. So we're going to have to slug our way through this resistance. And the peak of this resistance level will take us up, once we break through it, up to a 40 handle on Boyle. So natural gas looking good. We are at resistance, and we do have support down below at around 35.68. So Boyle remains strong. I would just nibble. Just keep in mind you have a lot of resistance in here. I'm surprised it didn't come up on a weekly time frame. There it is. It took a while to load. So you have a lot of resistance above. So keep that in mind. Stay small. buy on strength. If you're looking for a strong resistance level, it coincides with the upper band of that heat map, a little bit higher, 45.60. Once we get above that, it's off to the races. We're going a lot higher. But they say there's no inflation. Do I have anything else to go over? We're going to check back in with Goldman. Did they report? Did they not report? I know it's still too early. Nothing yet. All right, so members, we have an advanced order out to close out our strangle trade. For those just joining in, this is the trade here. We sold to open the 400 strike calls. We sold to open on the opposite side to balance out our strangle, the 362.50 strike with an expiration date of the 16th with a probability of profit of 93.97%. So, members, more to come on this trade. Everybody have a profitable trading day. Thanks for joining in. Smash the like button, please. Be well.